want to give you a look at where the Dow Jones ended for the day, sitting at 300 below overall, just under 52,000. The Dow recently blew past 53,000, and while it may have lowered back down just a bit, this is a pretty big deal. Or is it? So we are breaking down what this really means. Tom Tourek with Wilde Wealth Management here to translate all of this for us. Break it down in layman's terms, because it can get very convoluted, if you will, if you're saying, all right, 53,000, what does this mean?
At the end of the day, the Dow is nothing more than an index, which in this context, an index is just simply a measuring stick. So an index in relation to the Dow Jones is a basket of the basically 30 largest stocks, largest companies in the United States. So it's designed to give us an overall picture of how the economy's health is, but it's still in reality only 30 different companies. So it's useful, but it's a measuring stick. It doesn't report the whole story. It's a headline.
Yeah. What prompted, clearly, that's why we're talking about it today. What prompted that hit at 53,000?
Well, there's been a lot of confidence in the economy overall, and there's been a lot of growth over the years. We had a significant pullback. If you remember back in late February, early March, the markets fell, I'm going to say 8 to 10%, if I remember correctly. So when you have the markets pull back, but you maintain some level of confidence, you tend to get money that comes off the sidelines, gets put into the market, and then it drives the market right back up.
And throughout the months for the past year, we have been hearing from financial experts saying, don't look at your 401k, just kind of sit on it right now. When you watch these numbers, you hear this record-breaking 53,000 head point. Should people be looking at their 401k, or should we still stick with what analysts say prior is, don't look at it, just sit?
I think analysts are analysts for a reason, and financial advisors are advisors for a reason. So my advice would be pay attention to it, sit down with your advisor, make sure that your plan is actually a plan that tells your story. One of the things that I really like to make sure I communicate to clients is that the Dow and other indices, they tell a story, but they don't tell your story. So you want to make sure that you're structuring your financial situation so it's communicating your story and shooting towards your goals. Without a plan in place, the indices really don't mean that much. Kind
of a moot point.
Yeah.
And to your point, great point that you had made, Tom, just about your story is your story. Everybody is very much different, vastly different. When it comes to this record breaker headliner, what does it mean for somebody who is 30 years old as to somebody who may be retiring in 2 to 5 years?
Right. So for somebody who's 30 years old, there should generally be more optimism as far as the anticipation that the markets will continue to grow. That will help that portion of their portfolio grow and develop as they approach retirement age. They can afford to be a bit more aggressive in their strategies. When you start talking about somebody who's going to retire in 2 to 5 years, you want to rein things in a bit and make sure that it's age appropriate, risk appropriate. I remember dealing with people back in 08, 09, and we had that recession come in, which we all remember. It hit us all rather hard. And 08, 09, I would talk to people, and they were approaching retirement. I would encourage them, pull money back. Let's get some money. Let's make your portfolio more conservative, more appropriate for you. The clients who listened, they benefited. The clients who didn't and just wanted to pursue as much growth as they could, some of them pushed their retirement back by 7 to 10 years. You want to make sure you have a plan, have a strategy, and let that plan work for you so that you're not dependent on what any indice has to tell you.
All right, good nuggets of information. Tom Tourek with Wilde Wealth Management. Thank you for your time.
Thank you.